It's a number that was once a fantasy, a meme, a distant star in the financial galaxy. A number that skeptics said was a fluke, a bubble, a temporary madness. For years, it stood as a monument to a revolution that couldn't possibly be real. But today, it's not a memory. It's not a dream. It's the battlefield's $70,000. Bitcoin has returned, not with a whisper, but with a roar that is shaking the very foundations of global finance. We are witnessing a financial event unlike any other, a perfect storm of institutional power, mainstream acceptance, and raw, unbridled market psychology. This isn't just a pump, this is a siege, and the walls of the old financial world are trembling. To understand the sheer magnitude of this moment, you have to remember the journey. The scars of the crypto winter of 2022 are still fresh. We watched empires like FTX crumble into dust. We saw the headlines declaring the death of cryptocurrency, the end of the experiment. The price of Bitcoin was battered, bruised, and left for dead by a chorus of naysayers. It was a period of silence and rebuilding, a bear market where the true believers were separated from the fair-weather fans. But beneath the surface, something profound was happening. The very institutions that once mocked Bitcoin were quietly, methodically, building the tools for its greatest ascent. Because this time, it's different. You've heard that before, I know. It's the famous last words of every bull market, but this time the data screams it. This rally isn't being fueled by Elon Musk tweets or retail FOMO alone. This is an institutional tsunami. The catalyst, the undeniable engine of the surge, is the spot Bitcoin ETF. Think of it not as a new product, but as a bridge. For decades, there was a chasm between the traditional, regulated world of Wall Street and the chaotic frontier world of crypto. On one side, trillions of dollars in pension funds, retirement accounts, and institutional capital, governed by rules that forbade them from touching a digital asset. On the other side, Bitcoin, the ETF, is that bridge. It's a regulated, familiar, safe-feeling vessel that allows your average financial advisor, your grandparents' retirement fund, your conservative hedge fund manager, to gain exposure to Bitcoin without ever having to understand a private key or a crypto exchange. And the flow of capital across this bridge is not a trickle, it's a deluge. Let's talk about the titans. BlackRock, the largest asset manager in the world, with over $10 trillion in assets under management. Their iShares Bitcoin Trust, IBIT, has become a monster, sucking in billions of dollars at a pace that has stunned even the most optimistic analysts. Fidelity, another legacy finance behemoth, is right behind them. These are not cowboy speculators. These are the custodians of the global financial system. Their entry is a stamp of legitimacy that is more powerful than any price movement. Every dollar that flows into IBIT is a dollar that BlackRock uses to buy actual, physical Bitcoin. This creates a relentless, structural buying pressure that the market has never seen before. The supply of Bitcoin is finite. Only 21 million will ever exist. And now, the most powerful financial entities on the planet are in a race to accumulate it. This is a recipe for a supply shock of historic proportions. But here we are, at the gates of $70,000. And the battle is fierce. Breaking through a psychological barrier like this is never a simple task. It's a war fought on two fronts: the cold, hard calculus of order books and the volatile, unpredictable realm of human emotion. On one side, you have the bulls, the long-term holders, the ETF buyers, the institutions with deep pockets who see this not as a peak, but as a stepping stone to 100,000, 200,000, and beyond. They are the ones buying every dip, providing a solid floor of support. They believe in the narrative of digital gold, the hedge against inflation, the new global reserve asset. On the other side, you have the bears and the profit takers. This group includes the traders who bought at $20,000, $30,000, $40,000. For them, $70,000 represents a life-changing profit. The temptation to sell, to realize those gains, to convert digital wealth into real-world houses and cars is immense. This creates a massive wall of sell orders right at this resistance level. Every time the price taps $70,000, A wave of selling emerges, pushing it back down. This is the battle, a tug of war between those who believe the future is brighter and those who are happy to cash in on the present, and the volatility is breathtaking. We see $1,000 swings in a matter of minutes. This is the market digesting this new reality, testing its strength and shaking out the weak hands. For traders, this is both heaven and hell. The liquidity is massive. The moves are explosive, but the risk of being on the wrong side of a liquidation is higher than ever. This isn't for the faint of heart. The charts look like the heartbeat of a panicked animal, all sharp spikes and precipitous drops. This is the sound of a market finding a new equilibrium, and it is a noisy, chaotic process. But the battle for $70,000 is about more than just price. It's a battle of narratives. The bullish narrative is stronger than it has ever been. We are staring down the barrel of a potential new global recession. Geopolitical tensions are soaring. Governments are printing money like never before, creating a deep-seated distrust in traditional fiat currencies. In this environment, Bitcoin's value proposition as a decentralized, borderless, scarce store of value resonates more powerfully than any marketing slogan. It's becoming the asset for a world that is losing faith in its old institutions. Furthermore, the upcoming Bitcoin halving, expected in just a few months, is looming large in the minds of investors. This pre-programmed event, which cuts the reward for miners in half, effectively slashes the rate of new Bitcoin supply. It's a built-in code that enforces scarcity. Historically, every halving event has been followed by a monumental bull run, as the dwindling new supply collides with increasing demand. With the ETF demand now in the picture, the potential supply squeeze from the halving could be astronomical. The battle at 70,000, therefore, isn't just about this level. It's about positioning for the supply shock of the century. However, we must temper this euphoria with caution. The bears have their narrative too. They point to the potential for a macroeconomic downturn. If the Federal Reserve is forced to keep interest rates higher for longer to combat inflation, it could suck liquidity out of all risk assets, including crypto. They warn that the ETF inflows, while impressive, could be fickle. What happens if, for a week or two, we see outflows instead of inflows? The psychological impact could trigger a violent correction. There is also the ever-present regulatory ghost at the feast. While the ETF approval was a massive win, the war with regulators like the SEC is far from over a new crackdown. A surprising legal decision or hostile legislation could instantly sour the mood and send the market reeling. And we cannot ignore the leverage in the system. The crypto market is still built on a foundation of borrowed money. A sharp move down could trigger a cascade of liquidations, amplifying a minor correction into a full-blown crash. The battle at 70,000 is not just between buyers and sellers. It's between the new institutional paradigm and the old inherent volatility of this nascent asset class. So what happens next? The truth is, no one knows. The market is a complex, adaptive system that defies simple prediction. But we can assess the forces at play if the ETF inflows continue at their current relentless pace, if the macroeconomic winds remain favorable, and if the market can successfully absorb the selling pressure at this level. Then a decisive break and hold above 70,000 seems not just possible, but probable. That would open the floodgates to a new price discovery phase, where the old all-time high is no longer a ceiling, but a foundation. But if the institutional demand shows even a hint of faltering, if the profit takers overwhelm the buyers, then we could be in for a significant period of consolidation or a painful pullback. This would shake out the excess leverage and allow the market to build a stronger, healthier base for its next leg up. Either outcome is possible. This is the essence of the battle. Ultimately, the siege of $70,000 is about more than a number on a screen. It is the culmination of a 15-year experiment. It is the validation of a technology that refused to die. It is the story of a decentralized network, born from a cryptic white paper, now commanding the attention and capital of the most powerful financial institutions on Earth. Whether Bitcoin emerges victorious from this specific battle in the coming days is almost secondary. The real story is that the war is already being won. The narrative has shifted. The genie is out of the bottle. The world is now having a conversation, Not about if us digital assets have a place, but about what that place will be. So watch the charts, feel the volatility, but understand that you are not just watching a price ticker, you are witnessing history in the making. You are watching the future of money being forged in the fierce, unforgiving fires of the global market. The battle for 70,000 is underway, and every single one of us has a front row seat